The stock market finished the first quarter strong, and it was the S&P 500's best first quarter since 2019 with a gain of 10%. Look, the stock market's closed today due to Good Friday, but we just had really good inflation numbers. Well, I wouldn't say really good, but better than expected inflation numbers. The Fed's preferred inflation gauge, known as the Personal Consumption Expenditures Index, or PCE index, numbers came out, and there was a lot of anxiety about whether these numbers will be hotter than expected, given the hotter than expected January and February CPI and PPI inflation numbers. These numbers pretty much came in line with expectations on every metric. And then for month over month, for the headline number, it even came even lower than estimated. So I think that the markets are closed today, but I think this is just what the markets needed. The markets really wanted, right now the markets are really focusing more on the macro economy and earnings growth and profitability of companies, and less on the Federal Reserve at this point in the business cycle. And the markets aren't really caring as much about the path of interest rates. They just want to see the economy's growth and strength continue, and earnings for companies stay strong like they have been over the last 2 quarters. So if that continues, then investors won't really be paying attention on whether or not the Fed will cut rates 3 times, 4 times, 2, 1, or perhaps none this year. Because I think a lot of investors, and Jeremy Siegel kind of mentioned this, and he's a Wharton finance professor and the chief economist at WisdomTree, pretty much saying that, investors are really focusing more on the economy and earnings growth than the path of interest rates at this point in the business cycle. We couldn't say that last year, and we couldn't say that for 2022. But at this point, it's optimistic that we can say that. Look, the PCE inflation numbers, it was 0.3% month over month compared to 0.4% estimated. And then year over year, it was 2.5% as estimated. And then core PCE, which is minus volatile food and energy, came in at 2.8% as estimated. And then core PCE month over month was 0.4%. So since those numbers came in line, pretty much, and with the month over month even slightly lower, I think this is exactly what the market needed and the gas in the tank. But anyways, as I said earlier, the markets are at this point in the cycle focusing more on the economy strength and earnings growth for companies. Good news is good news again, and the markets could care slightly less about hawkish Fed talk, like Christopher Waller's comments the other night. The markets are starting to look past that. And I think that's a good sign for the economy, and it shows more gas we have in the tank, especially because these inflation numbers came in line with expectations. So that's good news. And although the market's closed today, I think on Monday, the market should take this pretty well. Obviously, we'll have to see, but this is pretty good news.